the only holy grail, the science of combining uncorrelated trading systems and the synergistic effect. We're going to look at the new 6 systems that I've developed. We're not going to look at how they work, but we're going to look at their results and how combining their results produces amazing results. We're first going to look at each system on a one-lot basis and a $75,000 account with no reinvestment. Next, we're going to look at each one individually, starting with a 75K account with dynamic margin reinvestment, which is basically a volatility-based reinvestment. Okay, let's now look at our results. Okay, first we have our ES system. Again, this is all a 10-year period, January 5th, 09 to January 4th, 19. 3750 slippage and commission. 199K on a one lot, 12.5 plus drawdown. The equity report, which is for a trade plan, shows the compound growth rate, max drawdown, Sharpe ratio, MAR, winning months, losing months. Here it is at the 14.42 return, 13.62 max drawdown. That's a MAR of almost 1.6 and a Sharpe ratio of almost 1.38. The copper system made 271 during the same period, and the equity report shows a 17.02% compound growth rate and a max drawdown of 9.23. That's a 145 plus Sharpe ratio and a MAR of 184. Crude made 257 during this period. That's a 16.51% compound growth rate with a 12.66% max drawdown. The Sharpe ratio is 0.95 because the system is actually a lot more volatile and equity is less consistent, and the MAR is 1.3. The gold system made 317, almost 318,000 during this period, but equal long and short. It's an 1854 compound growth rate with a almost a 13.4% max drawdown. Sharpe ratio is 141, and the MAR is almost 1.39. The NASDAQ system made 213 during this period with a 1464 compound growth rate and a 7.18% max drawdown. That's a Sharpe ratio of almost 158 and a MAR of almost 2.04. Now the bonds are our last. That made 268 during the period. That's a 17.08 compound growth rate, a 9.69% max drawdown, which is a Sharpe ratio just about 1.6, and a 1.76 MAR ratio. Okay, let's look at our results now for each individual market with reinvestment. We're going to use my concept dynamic margin, which basically is a volatility-based sizing. We're going to reinvest profits, and we're not going to have any deductions for taxes. We're also going to allow the max number of contracts to only go to 100. So we're going to look at the ES, and the big numbers here don't really mean that much with the reinvestments. The 75K grows to 5, 10, 15, 20 million. Let's look at the equity reports on all these because that's what's important. Our compound annual growth rate goes to 65% with reinvestment, but our max drawdown is now 48%. That's a Sharpe ratio of 152 and a MAR around 135. On the crude example, that's a 58.62 compound growth rate with a 42.90 drawdown, but 118 on the Sharpe ratio and a 136 plus on the MAR. For gold, it says all the numbers look big, but what's important is this. That's a 64.76 compound growth rate with a 33.48 drawdown. That's a MAR of 1.93 and a Sharpe ratio of 168. On the NASDAQ, we see a compound growth rate of 70.93, a 35.80 drawdown. That's a Sharpe ratio of 163 and a MAR of 198. For the copper system, we have a compound growth rate of 59.82, a max drawdown of 41.83. That's a 145 Sharpe ratio and a 143 MAR. And finally, the bonds. A 71.77 compound growth rate, a 47.18 max drawdown. That's a 1.68 Sharpe ratio and a MAR of 152. Now, one point I want to make, you can see some of these drawdowns in the 30-40% area are way too big. So that's part of the issue. As an individual system with reinvestment of profits, the drawdowns are really too big. So how can we solve these massive drawdowns? The way we can solve them is to combine all the systems together, and we're even going to add another feature, which is a safety. When the systems are not performing well, we will turn them off, at least temporarily, until they start performing. We're going to use equity curve feedback and turn the systems off when they move so many standard deviations below their average equity, and then turn them back on when they've retraced close to the average equity. So we're requiring a 50% retracement in order to turn the systems back on. So that tells us that they're beginning to work again. Let's now look at those results. Okay. Now we're going to look at all 6 systems combined. $75,000 starting account, we're going to reinvest. As I said, we're going to turn the systems on and off based on performance. We're going to use sync technology, which allows us to accurately define our start date. And we're going to have 2 different start dates. We're going to use January 1st of 2017, as well as our original date, which was January 1st of 2009. And if we skip a trade due to either the safety being off, the system's not performing, or there's too much risk to take that trade, we won't get back into a new signal. All right, so our first one program, which starts in 09, this is our test going to 09, makes 32 million from 75K, but that's not what's really important. Let's look at our stats here. We have an 87% compound annual growth rate with only a 9.5% max drawdown. That's a Sharpe ratio of 3.53 and a MAR of 9.196, basically 9.2. You can see that these numbers on the MAR and the Sharpe ratio are much greater than any of the other combinations of each individual system. The compound growth rate is higher than each individual system, and the max drawdown is less than the least for any of the individual systems. Let's look if we started trading this on January 1st of 2017, again with 75,000 to start with. During this period, we would have been 295K with an open 21,000 in profit. That would have given us a 127% return with a 7.3 max drawdown. And Sharpe ratio is about the same, that 3.6 area. And the MAR is just off the map at 17, almost 17 and a half. This shows the power of combining multiple systems, and the fact that the closest thing to the Holy Grail is to combine uncorrelated systems into one trading strategy using a trade plan. And the best way to do this is in Trader Studio for TradeStation. And if you buy all 6 systems from us, we'll give you a special offer on Trader Studio for TradeStation with the code for these trade plans. This way, you can combine these systems and use this advanced money management of the safeties as well as the sync technology. In addition, once you enter a value in for what your starting account is and a start date, Trader Studio will tell you about your sizing. If we look at the active orders, we can see that since 2017, we're now trading a 2 lot of gold. This is a great opportunity to be able to have professional level money management at a very reasonable cost.